Hey guys, Brad Bob here, and today we're continuing on our TSP series, and we're talking about TSP loans. What are they? What are specifics? How do they work? Okay, so let's talk about it. TSP loans, you can get, there's two different types. You've got general purpose and you've got residence, all right? For general purpose, you don't need documentation. For residence, you do need documentation that you're buying a house. It costs, I believe it's either, I'm pretty sure it's a $50 processing fee for a loan, okay? And there may be a $50 processing fee and maybe a $100 processing fee for the residents, but you do have a processing fee for it. So if you have the $50 processing fee, you get a loan for $5,000, they're gonna give you $49.50, okay? So we got the two types. Now the amount you can get is the smallest of 3 tests, okay, with a maximum of $50,000. One test is your contributions plus your earnings, okay? Not the government matching, but your contributions plus your earnings in TSP. Another test is half of your contributions plus your earnings, or $10,000. And then the third one is $50,000. And the last two and three, are you take the amount and you subtract any outstanding loans that you have, okay? So you can have a maximum of 2 TSP loans at one time, all right? So not only can you have one, you can have 2. The aggregate balance of those 2 loans can only be $50,000, all right? You can't get 2 for $50,000. What else? Interest rate. The interest rate is currently 4% as I'm doing this video. But the interest rate that you're paying back, so the interest rate is going to be fixed as of the month that you start the TSP loan. And it's going to be fixed at whatever rate the G fund is currently paying, okay? So you start it this month, you're going to pay 4%, and it's going to be 4% for the life of the loan, all right? Terms. So terms, if you're doing just a general purpose, you pay it back in 12 to 60 months. Okay, and you pick what that time period is. Residence, 61 to 180. And then you can, so you're gonna pay it back out of your paycheck, but you can pay more back. So you can choose to write a check and pay it back more aggressively. Max of 2, we got a max of 2 loans and $50,000. Where and repay. We talked about repaying it. Oh, where does the money come from and where's the money go back to? Okay, so the money comes from, it comes proportionally out of whatever funds and whatever types you have. If 80% of your TSP is traditional TSP, 20% of your TSP is Roth TSP, then that's where it's going to come from. 80% traditional, 20% Roth, okay? And same kind of thing as far as the funds. So you can't pick where it comes from, all right? And then it gets repaid back the same way, okay? Goes back 80% traditional, 20% Roth, all right? Now, good, bad, should you get a TSP loan? And that's, yes. So some things to think of there. When you take a loan out of your TSP, let's say you take $50,000 and you have $250,000 in TSP. Now, once you take that 50 out, your balance is only 200, okay, until you get it paid back. So as TSP gains or loses, you're getting that on 200 versus 250, all right? And the market tends to be up, historically speaking, about 7 years out of 10. Okay, so more often than not, you're going to be losing out on gains by taking money out of TSP in the form of a TSP loan. So that's not good. Now, paying it back, the interest rate, people talk about the interest rate. Well, the interest rate's really low. Okay, so that's a good thing. Well, I guess it is. And yes, you pay the interest rate back to yourself. Also, the interest that you pay back is with after-tax dollars, right? So that's the interest is money you've already paid tax on. So then you're putting it back into your TSP. And if it goes back to traditional TSP, then when you take that money back out of TSP, then you pay income tax on it again. So the interest is effectively taxed twice. All right, so that's not a good thing. So generally speaking, I don't love TSP loans, okay? There may be a scenario where it makes sense, but more often than not, it doesn't make sense. Another thing or thought, when you retire, how do TSP loans work when you retire if you have an outstanding loan? Well, it used to be that you can't pay a TSP loan back in retirement, and then you have, 60, it ends up being longer. They say 30 days, but it ends up being more like 60 to 90 days to pay the loan back without having to pay tax on it, okay? So you can do that. You can also just let it go, okay? Not do anything about it. And if your loan was $50,000, then they're gonna more or less consider that a $50,000 distribution that you're gonna have to pay tax on. Or you can now set up payments in retirement. So you can set up payments to where you continue to pay that loan back in retirement, okay? Which was not an option here a few years back, but it is now. So that covers most stuff about TSP loans, okay? So I'll put a link to more details about TSP loans in the information here on the video. Put a couple more links about me, Bob Financial, what I do. Please like the video, share the video with a friend, and spread the word about federal retirement planning. Thanks, guys.